Welcome. Tonight's program is No Regrets Home Purchase, hosted by a panel of three. Myself, Donna Kelly, a licensed real estate salesperson with Find Real Estate. Joshua Martin with Home Management, a licensed home inspector and licensed mold assessor. Jason Tedford from New American Funding, he is a loan officer. Management, a licensed home inspector and Today's roadmap to a no regret purchase. What we're going to cover today is the market pulse, what's actually happening in the capital region right now. Money matters, navigating the financial side of your home purchase with confidence, and looking through the inspector's lens, protecting your future investment. And at the end, we're going to talk about strategies for competitive offers. And then it's your turn for questions and answers. The real estate market today, home prices are rising. They've been rising year over year because there's low inventory. And when I say there's low inventory, I mean there's not enough homes for sale. And buyers are concerned. They want to buy the right house and they're spending a lot of money to do it. And they don't want to overpay. So right now I want to just take a moment to look at stats from three different counties: Albany County, Saratoga County, and Schenectady County. When you look at these numbers, and I'll read them off to you, they are an average of what's going on in the county in March of 2026. So for Albany County, the number of homes for sale, months of inventory is only 1 month. But remember, we're coming out of winter and we're going into spring, and there'll be more homes on the market in the next 60 days. Sold to list price, 100%. Again, that's an average, but what it's saying is they listed at one price and it's sold for that price. We know there's multiple offers out there. Again, it's an average. In Albany County, days on market was 17. What that means is from the day they listed the house until they pended the sale, that's how many days before it moved forward. And the median sold price for a house is in Albany County is $390,000. You know, I think when I first got into the market, it was $250,000. That was a decade ago. So you see how things have changed. In Saratoga County, they have a little bit more inventory. They have 1.86. They have the same percentage, 100% for sold to list price, but their days on market are much smaller. They're 10 days. And if you look at their median sold price, it's much higher, $514,000. But there's a lot of $1 million homes in Saratoga, and that raises that average. There is a mix. They're not all high at 514, but it just gives you an idea of what's going on. Also in Saratoga County, there's a lot of new construction homes. Now we're looking at Schenectady County. They're like Albany County. They have 1 month of inventory. And just like the last two, everybody's at 100% for sold to list price. But if you look, they have 27 days on market. So from when they list the house till it pens is 27 days. So it takes longer to sell a house in Schenectady County, and the price is less. The median sold price is $299,500. So it kind of gives you an idea of what's going on, and hopefully that will help you moving forward. I also wanted to talk about the new buyer psychology. So remember, I brought up COVID. During COVID, we all had so much to learn. Interest rates had never, in the history of interest rates and mortgage rates, ever been that low. So we were all running around like chickens with our heads cut off, including the sellers. So we would go and show you a house, and you would have 1 day or 2 days to put in an offer and have it accepted. And things move so fast. Even for sellers, they didn't like it much either. You weren't really working on education. You know, we like to try to teach you, everybody in your team, myself, the lender, the home inspector, your real estate attorney. We like to go through every process with you and make sure you understand it before we get there. We just didn't have that kind of time. So you're really guided by availability. But today, we're also much smarter, including that seller. So if that seller has multiple offers, they know they don't have to make a decision right now. They can say, I want highest and best by Monday or Tuesday, which allows them time, but it allows you time to do your homework, for me to do my homework, for you to ask your lender questions, to ask your home inspector questions, and then put in an offer. It also gives you time to figure out what your non-negotiables are. So when you're going into a home sale and you're working with me and your lender, and you now know what your budget is, you can say, okay, I absolutely have to have a 2-car garage. I have to have central AC, and I'm not going to negotiate on it, or I'm not putting in an offer. It's just so much more simpler now, even though the inventory is low. So stay to the end, because that's when I'm going to tell you about terms and multiple offers and strategies. But to buy a home today, you have to do first steps. Talk to a real estate agent and pick one. So interview them. Then you want to talk to a loan officer, and you're going to find out your budget, and they're going to walk you through the process of what happens once you put in an offer. Then you're going to identify your non-negotiables, and you're going to start searching for a home, which is a lot of fun. It shouldn't be stressful. If you do everything else in advance, you're going to have fun. Then you're going to put in your first offer. So stay till the end, and I'll talk about strategies to win multiple offers. Until then, I'm handing you off to Jason Tedford to talk about money matters and the financial piece. Welcome, Jason.
Thank you very much, Donna. Great to be here. I appreciate you having me on. And thank you to everybody who's tuning in to learn more about everything that we're going over tonight. Just going to touch a few minutes on first time home buyers. And Donna, if you can go to the next slide. So, just a quick background on myself. My name is Jason Tedford with New American Funding. I've been in the mortgage industry about 30 years. Joined New American Funding last March. I came here because of the service, which first and foremost is the biggest reason I joined. We have a 4.9 out of 5-star rating on experience.com. The programs that we have are immense and pretty much have the opportunity to help anybody in any situation. Don, if you can go to the next slide, I want to just dive in because it's all over the news, mortgage rates, right? And that seems to be like the buzzword for everybody who's buying a home is, what kind of rate can I get? And there's a lot that goes into mortgage rates that people maybe aren't aware of that make up what determines what your mortgage rate will be, right? I'm not going to cover all of them. I'm just going to go over a few. The type of loan specifically, whether it's a conventional loan or a government loan like USDA, VA, FHA, will determine in part the interest rate that you get. Conventional loans are priced different than USDA. USDA is priced different than FHA and VA, et cetera. Amortization, whether it's a fixed rate or an adjustable rate mortgage, okay? And each has their advantages. If you plan on being in a home longer term and don't plan on, moving anytime soon, a fixed rate is probably the way to go. If you have a short-term plan, maybe in the next 3 to 10 years, you plan on moving, then you might want to consider looking into an adjustable rate mortgage. Why? Because if you have an exit strategy, you're going to be able to get a lower rate during those years that you're living in the home. The type of loan that you're going to get, such as a purchase versus a refinance. A purchase is going to be priced a little bit better than a cash out refinance. So if you own a home already and you're looking to do a cash out, the rate probably will be a little higher than if you were purchasing a home. The loan to value, how much you're putting down, 5% down, 3% down, 20% down, et cetera, will in part dictate what kind of an interest rate you get. Also, the number of units that you're looking to purchase, right? A single family is going to be priced better than a 2, 3, or 4 family. Owner occupied versus investment property, right? If this is your primary residence, it's going to be priced better than if it's an investment property. Higher risk, higher interest rate. Okay. Credit score and credit history are equally important and probably are one of the biggest factors in determining your mortgage rate. The higher the credit score, the better the interest rate. The lock period. Okay, this is another important one. A 30-day lock versus a 45-day lock versus a 60, a 90, 180, or even a 360, right? Depending on your need, the longer the lock is for, the higher the interest rate. Okay, the shorter the lock period, the better the interest rate. There's a lot of other factors too. Seller concessions, not necessarily determining the mortgage rate, but the program itself will allow you to use anywhere from 3% to 6% to roll some or most of your closing costs into the total purchase price. Donna, if you can skip to the next slide. I just want to go through the steps of the mortgage process. Go back one, please. Okay, the next step. So basically you want to get your pre-approval. So you meet with your mortgage person, and these steps can be interchangeable. And Donna's slide, she shows meet with the real estate agent first, and that's perfectly fine. They really do go hand in hand, right? Before you start actively looking at houses, you need to know your budget, but you can have that conversation, build the rapport, feel out the personalities with your real estate agent, find out who you feel comfortable working with, and then have the conversation with your mortgage person to know exactly where you stand from a budget perspective. Once both of those steps are done, your agent's going to help you find the house that you like, right, and that you want, and try to get you all of the must-haves and as many of the the absolutes as possible. Once you find your house, you're going to make your offer. If your offer is accepted and there's an actual fully executed purchase contract in place, your real estate agent or you, the buyer, will forward that to me, at which point we're going to do formal application. And that's when your loan disclosures will get sent out to you for you to review and sign, get back, and the mortgage process starts. Once that happens, you're going to have an inspection contingency in your contract where you want to get any inspections done that are deemed necessary or even mandatory. And Josh will speak in more depth about the types of inspections. And then from there, not listed on here, but you're going to get your appraisal done. And in between all that, before all that, you're going to have your attorney approval clause, which is basically like your get out of jail free for any reason. Typically, it's 5 business days for you to, if you have cold feet, buyer's remorse, whatever the case is, it's your opportunity to still get out of the contract legally without any other qualifying reason. After that, it's not quite as simple. There has to be a qualifying reason. The house fails inspection. The house under appraises. You get denied for financing. Okay, those are all qualified events on why you could still end a contract. Assuming everything goes well, inspections go well, appraisal goes well, your file moves through underwriting, we get a clear to close. At that point, it's coordinating a closing date between you, your attorney, the seller's attorney, and the bank attorney. Don, if you want to go to the next slide, the do's and don'ts. Just going to touch on a few of them. Obviously, what you're doing right now, do more of this, right? Learn about the home buying process. Educate yourself. It's important. Don't go into this blind. Take the time, put the work in up front, and it will pay out much better rewards for you later in the process. A lot less stress and a lot more smooth process overall. Couple key things. Stay in your job. Do not retire. Do not change jobs. Keep where you're at. And if you do have the potential of changing jobs, let your loan officer know before you make any changes. Okay. And the reason for that, real simple, is a change to the job could be a change to the income, a change to the job profession, could potentially result in you no longer income qualifying. Okay. So we always want to know about any of those potentials before you make those moves. Stay current on all your payments. Sounds self-explanatory, but there are possibilities we're going to have to run more than one credit report during this home buying process. And if all of a sudden 30-day late payments start showing up on your credit report, it could disqualify you from qualifying. Okay. Make sure you organize all your documents. I'm going to touch on this on the next slide. And a couple of the don'ts: try to avoid cash deposits at all cost. Okay. Because cash in the mortgage world does not work. In order for cash deposits to be considered your own money, they have to be seasoned in your account for 60 days or longer. Okay. So do not deposit cash. Do not deposit large deposits unless you talk to your loan originator first. Don't allow your bank accounts to go negative. Obviously, keep a positive balance in your account every month. Try to avoid applying for new credit. Every time you incur another credit inquiry on your credit report, it's a potential to lose points. Plus, if you open new credit, we're going to then have to count that debt into your debt to income ratio, which could potentially disqualify you from qualifying. Don't close out credit card accounts after you've paid them off. A lot of times you think, naturally, I paid this off. I don't want to keep it open anymore. I want to get rid of it. Well, if you've got a 10-year-old credit card and you pay it down to zero and you keep it open, that's great. But if you close it out, you just cut off that 10-year history that you established, and it could actually hurt your scores. All right. And Donna, if you want to go to the next slide, the key players in the home buying process: your mortgage loan originator, your loan officer, myself, your real estate agent, Donna, your appraiser, your inspector, Josh, title officer. I like to use attorney. In New York State, we're an attorney state. So attorney is a critical part of this. You do not want to go into this without an attorney. Even though technically you can, it's not worth the little bit of cost involved to purchase, to pay for an attorney to represent you, so that you don't have a financial regret later in the process. Well worth it. The underwriter, they're the person that says, yes, you're getting money, or no, you're not. So they're a critical part of this process too. Your loan processor is part of your mortgage team. Myself, my loan assistant, the loan processor, and the underwriter are all part of the team that are going to help you get the financing that you need. And then at the end, your insurance agent. You're purchasing a home, you have to have insurance on it. So having the right insurance agent is another key factor that goes into this. Every part of this is an integral part of the puzzle. And Don, if you can skip to the next slide, there's only a couple left. Pre-approval documentation. So at New American Funding, we try to do bona fide pre-approvals, meaning we gather all your documentation up front. If there's anything questionable, we can run it past an underwriter for an actual official underwritten pre-approval, which is the strongest pre-approval letter you can get. Unlike a pre-qualification where it's simply an application and a credit report and nothing's been verified, and the letter is written saying, okay, as long as this debt to income ratio is accurate, as long as this checks out, you're pre-qualified. A pre-approval letter is going to be a more solid offer, especially if you're in a bidding war with multiple buyers. Your pre-approval letter will stand out. Okay, and the documentation you'll want: driver's license, pay stubs, W-2s, tax returns, bank statements. Those are the key documents. And then if there's other types of income, or if there's a divorce, for example, a separation agreement, et cetera, et cetera. And Donna, I think that concludes my section. So I just wanted to say, thanks again very much for allowing me to talk. And at the end, we'll all be available for Q&A. And I'm going to turn it back over to you, Donna.
Okay, thank you very much. I want to introduce Josh Martin from Home Management, and he's going to talk about protecting your asset. Thank you, Josh.
Thank you, Donna. And I just want to say, Jason, that was extremely well said. Good stuff. So I think I want to just compliment some things that Donna and Jason have already discussed. The first thing that comes up and came to mind was some of the pricing that Donna alluded to at the beginning of this webinar, right? And the cost of homes these days, especially in New York. It's not cheap buying a home. It is one of the biggest investments that we're going to make. So that's where I think the home inspection really comes into play of helping you protect your investment, right? Jason also alluded to it that there's a contingency that's set, right? So there's a dollar amount that is determined between both sides in regards to what would deem something we would consider a major in the home inspection world. So if there are any big ticket items, maybe it's roof related, maybe it's your heating system, maybe it's plumbing related, maybe it's structural with foundation, maybe it's something like an independent water source, your well. Maybe it's an independent source of waste, like your septic. There are a lot of different things that can come up from a major perspective. As I say, the major perspective, another word that comes to mind is mold. So there's just a lot of different moving pieces. And I think the next thing that comes to mind is inspections are extremely important for those first time home buyers that Donna and Jason also spoke of earlier. First time home buyers, this process can be overwhelming. It can be stressful. And as they both said, education and communication are key throughout this process. So that really marks not only a good real estate agent or someone that's helping you from the financial end of things, but your home inspector too. That process, it should be educational. They should be communicating with you from start to finish. Right when you schedule the job, clear expectations, clear cost, what they're going to get when they come to the job site. And, it's kind of setting the tone. Once the inspector gets there, it's about 2 hours on site and it's about answering all your questions and concerns that come up. And they come up the night before, they come up during the inspection when you're in the basement. There's a lot of things that people need to be educated and informed on and kind of understand when going into that big adventure of home ownership. Um, so the idea of, I think the next thing I want to talk about is it becomes popular. Believe it or not, 40% of homes that are bought and sold in New York still have an inspection waived. Now I get it, right? Some people have had a really bad experience in the past with an inspector, and it's like, why? Why would I do that? Whether it's the agent, whether it's the client themselves or their parent. Um, what I'd like to encourage you is inspections have grown. Inspectors and specifically have gotten better at that communication side of things. And again, it is your last source of protection in a sense. So why not do it? Even if you don't see eye to eye, there are some really positives that can come out of it from things that maybe you didn't see before. Now, I also want to touch up on the idea of walkthroughs. So just know if you're buying a home and you're being steered in the direction of maybe waiving an inspection, know you can still lean on an inspector throughout the process. Get them in the house with you prior to putting in an offer. We call it a walkthrough. Okay. I like to do pre-purchase walkthroughs. I like to do pre-listing walkthroughs. It's all about transparency. So if I'm working with a seller, I want them to have a clear idea of what's going to come up during the home inspection process. And if I'm working with a buyer, we're accomplishing the same thing. We're just not providing an extensive amount of documentation behind it with 150 photos. But we're still talking about those big items that, hey, this is going to need attention in the next few years. This is going to need attention. Maybe we're focusing our energy on something that doesn't need any focusing on. No matter what, we're able to kind of ease that pressure and that overwhelmingness that is a part of buying a home. So what I'm going to have here is Donna's going to click throughout. This is called the home management home maintenance checklist. Now, just know that anyone at any time can message either one of us and we'll get this checklist sent to you. this is just a fun little I don't even know what you want to call it, but a little piece of material to help homeowners just keep top of mind on some of the things they should be considerate of on a yearly basis. And there's some items in there that are outside of a year. Like for example, if we have a septic tank, we're pumping that every 3 to 5 years. If we have a public sewer line, I like to talk about the importance of doing a sewer scope around the similar timeline every 3 to 5 years, especially if you have things like trees in your front yard, or even if you ever had just some minor sewer issues. Make sure you send a camera down there and get a clear idea. Um, I know as you go through this list, you'll even come up with other items that are important when it comes to home maintenance. And again, that just speaks to all the different moving pieces that we have to understand as homeowners. Again, much easier said than done. Rely on an inspector, rely on a great agent, and rely on a financial advisor like Jason throughout this process, and it'll be a lot easier. So can you go to the next slide for me, Donna? So radon, I think this was just another thing that always gets brought up in conversation. So I wanted to touch up on it. I always hear, do I need to do a radon test with my home inspection? I radon is extremely important. I want you to think about radon needs to be a part of the conversation when purchasing a home. Okay. We've been doing radon tests since the 90s. It's not only a part of the inspection world, but it's a part of the construction world. So newer construction, for example, if they are building a home, laying a foundation, doing something called disturbing the land, then they're keeping top of mind of radon levels and trying to get a clear idea of what they are as well. What I'm getting at is anytime a home has been bought or sold, anytime a home has been built, radon is a part of that conversation, and it's our job to make sure it's a part of the conversation when purchasing a home. And there usually is a paper trail to follow. Maybe the home was sold 7 years ago. Most likely had a radon test done then. So it's important that it's a part of the conversation, but I don't want you to feel as if you are required to spend all this extra money during this time where it costs a lot of money to buy a home. It costs a lot of money to hire all the individuals you're seeing on the screen today and talking to. So just know the home inspection process, it doesn't need to have a radon test, but it needs to be a part of the conversation. Now, just to kind of educate a little bit more, know that the average cost for a mitigation system is about $2,000. So radon, as it is a scary word, and it's got some long-term health effects, but it's not going to break your bank. It is not like a roof that needs to be replaced or a failed septic or mold in the attic or basement space. The cost and what you're going to spend to remedy radon compared to some of the other items that are going to come up throughout the home inspection process is it's just a big difference. So again, I don't want that to deter someone from buying a home. Have it be a part of the conversation. Understand the radon levels for sure. Test in the future. It only costs a couple $100 to do a radon test. So do one. Once you're moved in and settled to the house, 5 years down the road, if you don't know at that point, know at some point. Just figure it out. But I don't make it something that kills your deal or gives you more stress than it should. Okay. Um, yeah, that is all I wanted to share tonight. Just know we're gonna be here to help. And and yeah, I'm gonna pass it back over to Donna. And I just want to thank everyone again, like Jason did, for coming in tonight and or even just listening to the webinar after the fact. I just want to again remind you that every one of us are available. We have Facebooks. Some of our contact information is going to be advertised throughout this webinar. Don't hesitate to reach out, even if it's just for a simple question. Again, my name is Joshua Martin with Home Management. Every one of our home inspections comes with a free mold assessment and free pest inspection. We want to help you understand those moving pieces. So hopefully I hear from you at some point in time. Thank you, Donna.
Thank you. That was amazing. There was a lot of really good information in there between you and Jason. Uh, you guys are terrific. I'm so glad to be part of your network and your team. So let's go to the next screen here. So this is what some of you may have been waiting for. If you're a home buyer and you've been out there for a little while, winning beyond the price tag, multiple offer strategies. When you find a house that you like and we sit down and write an offer, it's just not about the price. There's so many other moving parts in a contract. One of them is an escrow deposit. Normally that's 1% of the house price. So if your house price was $300,000, your escrow deposit would be $3,000. But if you increase that to 6,000, so you double it, right? You're showing the seller that you're serious, that you're willing to risk a little bit of money and you feel good about the house, about purchasing it. So, and I keep saying so I apologize. When you have multiple offers, sellers are looking at, let's say, 5 different offers, and they're all similar in price. So then they start looking at the terms. So it's your escrow deposit, closing date, right? That's in your contract or your offer. It's my job as a real estate agent to find out what the seller wants. So before we sit down and write the offer, I'm making a call to say, is the closing date important? What other things are important to the seller so that we can write an offer that'll be accepted? When I get that information, we'll review it and see what works for you. There is an inspection threshold that is in the offer that we're going to fill out. The standard is $2,000. As Josh was talking about, if you had to replace a roof, if it was leaking or there was a foundation, those are majors. They're going to cost more than $2,000 to fix. We never want to waive inspections. This is the biggest purchase of your life. It's your asset. So never, ever waive an inspection. But if you raise it to $3,000, will that hurt you? Or $5,000? It'll certainly make it look good for the seller. The only real thing that I could see, and Josh was talking about mold and it being more than an easy fix. And sometimes mold can be an easy fix, but it could be a $2,200 or $2,500 repair. And you put $3,000. Well, now you own that. So you have to think about that. And that's one of the things we'll discuss. But those are things sellers look for. Then there's appraisal gap. So if you have 5 offers, and I have seen this many times where the buyer goes 25,000 over list price. And it wasn't just in COVID years, it's still happening today. I just lost an offer because my buyers didn't want to go 25,000 over. But how do you handle that with an appraisal? Because if you're using Jason, he's going to send in an appraiser and they're going to say this house is worth so much, and you put in an offer for 400,000, but the appraiser says it's 390,000. So I have a little clause that I use that doesn't commit you to anything, but puts the seller at ease. That says that if there is a gap in the appraisal versus your offer price, that we'll discuss next steps, because they'll be worried that you'll just walk away. The other piece that Jason touched on is getting a pre-approval letter versus pre-qualified. And pre-qualified means that Jason's gotten all your paperwork and correct me if I'm wrong, has given it to an underwriter to review. This puts you a few steps ahead of all the other buyers out there. And that puts the seller at ease. So that's another strategy. Now, Jason offers something called NAV cash, and there's also home equity loans. And I won't really go into any of that because it's way beyond my expertise. But if you have any questions, you can shoot them to Jason. But remember, when you're putting together an offer, it's just not always about price. Even if you're the highest price, but you don't want to wait for 3 months for the seller to move out, and you put a different closing date, they're going to pick the next guy. So just ask questions at any time. Our numbers are on the last slide, but right now we're going to go to questions and answers. So ask questions and we'll answer them. And you can always do it later if you were busy watching your favorite show and you came back because you knew Facebook Live was going to tape this. You can just ask questions then. So I think we could probably unmute the three of us, right? And see what questions are out there. I actually have a question for Jason before we take everybody else's. Is that okay?
Yeah, of course.
All right. When you were talking about credit, you know how you run the credit score on everybody, and then if
Right.
the don'ts doing something, when you initially run the credit score, I've heard this term and I don't understand what it means. So what's the difference between a soft pull on your credit
Uh-huh.
score and a hard pull?
Yeah. Yeah. Great question, Donna. So, a lot of places will do a hard credit pull, which is basically pulling all three bureaus in. And a hard credit inquiry will show on your credit report as a credit inquiry. Two things can happen. One, it can potentially negatively impact your credit score. So if you're still like in the infancy stages and you just want to get pre-approved to find out what you can qualify up to, a soft credit inquiry, when we do a soft credit inquiry, we pull two of the three bureaus. It has no impact on your credit score because it's not an actual hard inquiry showing up on your credit. That's important step number one. Important step number two that a lot of people aren't aware of, there are mortgage lead companies out there that it's something called trigger leads. Now there's federal legislation out there to try to ban this from happening, but it's still currently happening. When somebody does a hard credit inquiry, the credit bureaus can sell that credit inquiry information to a company that's looking to purchase mortgage leads. Okay, so the next thing you know, you apply with New American Funding, and they did a hard inquiry on you. If we didn't stop that credit inquiry from being shared, a lead company can purchase that, and the next thing you know, you're getting calls from X, Y, and Z mortgage companies, and you have no idea why they're calling you. Okay, that's legal practice up until this minute. There is legislation in place to help change that moving forward. But what we do is we have the ability when we do a soft credit inquiry to also exercise an opt out. Okay, that opt out will prevent those trigger leads from ever happening. Okay, so it could potentially take 10 robocalls out of your life of daily activities. Okay, so just a little fringe benefit. Okay, but soft credit inquiries in general, that's the way to go initially. Okay, once you find the house, because we've already pre-approved you, right? We've already run your soft credit, we've already run your income and everything through automated underwriting, maybe even through an underwriter directly. So we know everything checks out. So once you find the house, then we're going to do a hard credit pull. We're going to pull all three bureaus. Okay. And what we do is you strip out the high score and the low score and take the middle. The middle score is your qualifying score. If there's two applicants, borrower and spouse, for example, whoever has the lower middle score of the two applicants, that's the qualifying score. Okay. But that's a great question, Donna. Hard inquiry, totally unnecessary in the beginning. And if you have a choice between a lender who can do a soft credit pull and a hard credit pull in the beginning, trust the lender with the soft credit pull. There's no need to put the unnecessary hard inquiry on your credit report.
Thank you. That was really a very good description or definition of what those differences were. And it's interesting to me that the information gets out there and lead companies pick it up. And so they get these buyers that, go to a lender, all of a sudden are being called by all these other people. Thank you again. Are there any other questions out there?
Donna, I can touch on one real quick.
Sure.
I see one asking about they're a current owner and they want to know more about a contingency of selling their existing home versus seeing if they can qualify without a contingency. And great question. There's a couple different options. One is, contingencies basically mean in order to buy your next home, you have to sell your current home. Okay. And that's fine. And that's been around for forever. Okay. But the market we're in and have been in for a while, if there's a multiple bid situation on a house, the buyer that does not have a contingency often, not always, but often will win out over the buyer that has a contingency. Reason being, there's more moving parts, right? The buyer has to find a buyer for their house, and they have to have their mortgage, and that has to coincide with the purchase of the buyer's new home that they're looking to get, right? So there's the potential for more things to come up, which could cause the transaction to fall through, right? So from a risk standpoint and the seller's eyes, if I have a choice between a buyer without a contingency and a buyer with a contingency, most of the time I'm going to consider the offer without the contingency. That's not set in stone, but just in general. If you try to get qualified without a contingency, there's a couple of ways. One, if your debt to income ratio is strong enough for you to carry 2 mortgages, and you have an intention of putting your house on the market and selling it shortly after you close on the new home, but you don't want to have to simultaneously close, then by all means, we can look to do that. Okay. And we do that quite a bit. Another option, Donna alluded to it, is a home equity line of credit. So if you have enough equity in your home and you want to take a home equity line out against it, leave your existing first mortgage alone, take a line out and use perhaps enough of that to purchase the home in cash, or a big enough down payment that you're minimizing the new loan amount, that's a possibility as well. And then the third option that we have, which is unique to this area, is something called NAF Cash. I won't take much time on it, just a minute. It basically means we do a full underwrite on your file. We get you pre-approved. If you're pre-approved, if you have enough equity in your current home now, typically they want 20 to 30%. We will buy the house that you want to purchase for you with our money. You're a cash buyer, okay? We then will rent that house back to you, okay? So the day we close, you can move in, okay, to your new dream home. That gives you an opportunity to stage and list your current home for sale. Typically 60 to 90 days is kind of the target turnaround, because NAF does not want to be a landlord, right? We're not in this for the landlord business, but we are in this to help you get your dream home. So if we can make that happen and speed up the process for you and give you top priority because you're now a cash buyer, then it's a perfect opportunity for the right person in the right situation. It's not the be all end all for everyone. Everybody's situation is unique, but it's certainly something that I'd be happy to speak with in more detail at any time if anybody has more questions. But that's a great question. Thank you for that. Appreciate it.
Yeah, thank you. I like NAV Cash. So, and I think we might have one here for Josh.
Hey, so what's coming up is the mold word, and I know it got mentioned a couple different times. So I would say I mentioned earlier, we give a free mold assessment with every one of our home inspections, and that's for a reason. That's because again, it's another one of those things that's a big part of the conversation. I would say 1 out of 4 inspections ends up having mold come up and being a part of that. We usually find it in the attic space or the basement. And the biggest causes from it are really just a lack of ventilation, excess moisture, and how that gets accomplished. It can always be a few different things. Whether it's the home not having gutters, and an improperly finished basement and trapping moisture in some areas, whether it's not having proper ventilation for the attic. So traditionally, we like to see perforated soffits and a ridge vent. It's a fresh inhale of air through those perforated soffits. It's a fresh exhaust of air through the ridge vent. Then there's other complementary systems like a gable vent, or just roof vents in general, which help push air in some of those different attic types that have some weird angles and areas where air just gets kind of trapped. Sometimes it's exhaust fans from a bathroom vent going into the attic space. There's a lot of different reasons why mold comes up. But again, it's one of those things that I think it's talked about a little bit scarier than it should. Uh, so when doing a mold assessment or dealing with mold, it's a three-step process here in New York. Okay. There's an assessment, there's a remediation, and there's a clearance. New York requires us to carry different licenses as the assessor and the remediator. So a lot of times if someone comes across mold in their house, they end up calling the remediation company because they're the one that handles the mold. And the remediation company then refers them to an assessor that they find reliable and professional. Um, for me, it's all about complementing the home inspection process and just adding another way that I can help the people out in the general public. Um, because again, it comes out a lot throughout the home inspection process. So we have an assessment where documentation is provided. You're giving an idea of what the cost is and what the project looks like. The remediation company then takes that assessment and they put together something called a work scope plan. That work scope plan is exactly how they're going to tackle the job, basically the check boxes of what the client is paying for. For the clearance, we typically are required to get that work scope plan as the assessor, then coming in to look at the job after the fact when the mold has been removed. It's been killed, cleaned, and removed theoretically. And a lot of times the remediation ends with something we call an encapsulation. So it's either a white or a clear, similar to a paint, but it's sealing off those now removed and killed mold spores that were there. And then hopefully, not all cases, but we want to see that they're addressing whatever the causes were, because that's really important. It's not about just killing, cleaning, and removing the mold. It's about addressing whatever the issue was that was creating the mold in the first place. Um, so again, just to reiterate, mold's a three-step process: assessment, remediation, clearance. Mold it is likely that it's a part of the conversation when buying a home. But again, I don't think it's something that should be too scary as long as it's communicated in the right way and it's taken care of. Now, from a cost standpoint, and I know Donna alluded to that a little bit. Um, I would say the average cost for a mold job is right around 4,500 bucks. It's usually based on square feet. We don't do something called spot treat mold. So if we've got more than 10 square feet of a specific spot, whether it's in the attic or the basement, we consider it deeming a professional remediation. They're going to come in and they're going to treat that whole space. And again, they're theoretically going to correct whatever the issue was that caused it. Um, but generally, most projects are right around a 1,500 square foot project, which comes to right around a $4,500 cost. Now, again, every home is different. Every job is different. So the square footage is a big detail when coming up with that dollar amount. And of course, just what the job entails, whether it's fixing ventilation, addressing a leak, having a new dehumidifier installed. There's a lot of different things that could be attached on to that remediation process. But again, even though it's a scary word, as long as you got an inspector and an agent that are well-rounded and can talk about it and help guide you through that process, it's something that is solvable, like most things that come up in home ownership. All right. Thank you, Donna.
Thank you. Can I ask one question? Sometimes I talk to buyers when we're walking
Of course you
around. Thank you. I just assumed you're going to let me. So when I walk around the house with the buyer, sometimes we see things in the basement and it brings up this question. And I don't know if it's silly or if it's not, but is there a difference between mold and mildew?
No, no, not at all. So mildew, I would say, so mildew is what you see on the exterior portions of the home because mold spores are all around us. That shows you that no matter where we are, there's the possibility of mold being conduced and growing just because of we're here in the Northeast and we get a lot of moisture. So we see mildew on our siding, we see mildew on our roof lines. That's very similar. That's the exterior mold. When we see mold on the inside of the house, it comes has a little bit of different characteristics because of the environment it's being developed in and growing in. But mold and mildew are very similar. Mold is like a mildew or an algae. Now, something that you do see a lot in basements, just kind of play devil's advocate with myself. A lot of times you see something called efflorescence, and that's on the foundation wall, and that's completely different. Mold isn't going to grow on the cement wall, whether it's concrete block or poured foundation. You're going to see that white chalky residue on those concrete walls because concrete's porous. It's going to absorb that moisture from the outside. And obviously, it's our job as homeowners to lessen that moisture, gutters, grading, things of that nature. But we're going to see that moisture sweat off on the inside of the basement and it's going to crystallize and it turns into that efflorescence chalky residue. That is not mold. Where we're having mold is on the framework, the wood, the subflooring. The floor joists. Maybe they put some finished material in the basement and that's got framework, drywall. That's where we're going to find the mold growth. And that's where you're going to really see that spottiness. Again, more like a mildew, but black or white, gray. Um, and that actually comes up my next point with mold is I think it's important to note that no matter the species, which there's a lot of different species out there, and you can go down a rabbit hole of what species cause what and what is connected to what health related item. And all that is relevant and pertinent. But I want you to know that when we remediate mold, the species doesn't determine how the remediation process goes. Regardless of what species mold it is, we're going to kill, clean, remove it, and address whatever it is the same exact way. So sampling sometimes gets brought up from a mold perspective, and very rarely do I believe sampling becomes very important because we're not too concerned about the species in most cases. Are there some cases? Sure. But in most cases, it doesn't matter. We just want that mold gone and we want that moisture out of there or that ventilation fixed or just a little bit more of a healthy environment, whether it's our basement or our attic. Um, does that make sense, Donna?
Yeah, it really does make sense. I appreciate that. And I also like how you were talking about the foundation and that white chalky stuff we always.
Fluorescence.
Yeah, thank you.
Yeah.
I'll let you say that word.
Yeah, I know.
But
Tongue
yeah,
twister.
it is. Yeah, that was really, really well said. Thank you. I love that description. I just had one other question I saw that came through about escrow deposit. I think that it came through probably because I was saying to increase it. And so I'm being asked, can you lose your escrow deposit? And Jason, you can certainly jump in at any time, but Jason had mentioned earlier about qualifying events to get out of a sale, right? So you can get out of a sale during attorney approval. You can get out of a sale at inspection. You can with a major, right? And nobody can get along. You can get out of a sale if you're not cleared for a mortgage, or if the house didn't appraise and nobody can decide, and if the title didn't clear, then you get your escrow deposit back. What can't happen is you can't wake up one morning and say, I don't want that house anymore. Give me my money back. The seller will most likely keep it. Did I get that right, Jason?
Yeah, yeah. Only during attorney approval clause, right? Your 5-day get out of jail free for any reason. After that, it's got to be a qualified event.
Yep, exactly. Okay, good. All right. I think that's all the
Donna,
questions. Go ahead.
I actually see one here
Oh,
from Lauren. Do I have a quick second still to?
you have plenty of
It's
time.
about credit. It's about credit. She asked, is there a minimum credit score to be able to qualify for a mortgage? That's a great question. And it depends on the program. But generally speaking, most local lenders out there, banks, credit unions, typically require 620 and higher for like their minimum, like their benchmark credit score. But that's not necessarily the benchmark that's set forth by certain loan programs. So like, for example, FHA says that with as little as 3.5% down, you can actually qualify with a credit score as low as 580. So 580 and up. Okay. However, if you're not a direct lender, seller, servicer of FHA, you typically will put overlays to your business's underwriting guidelines, right? So they might say, okay, well, FHA says 580, but we don't feel comfortable with that. We're going to require 620 or 640. Okay. With New American Funding, just as an FYI, we can go down to a 580 credit score with as little as 3.5% down. However, FHA also says if you can put down 10% or more, FHA will actually go down to a 500 credit score. So we mirror that. Okay. So New American Funding, and I've done many of purchase transactions with credit scores in the low 500s. The borrower has 10%, 15%, 20% to put down. Maybe they're selling their existing home and they have equity in it, so they can put more money down. So that's great news. You know, that's a great question, because I like people to know that, yes, ideally, credit score makes up your interest rate. It's going to give you more choices, right? The higher the credit score, the more options become available. But it doesn't mean you can't buy a home. Life happens to everyone, right? And nobody's protected from it. At some point, something could happen to any of us, and credit score could be impacted. And if that happens, it doesn't mean you can't buy a home. It means, and I'll tell you this, one thing just to piggyback off this, if you can't, let's say there's multiple reasons why your credit just won't work, we can figure out a way to get you credit qualified. Okay. Maybe it takes 6 months, maybe it takes a year, but we don't like to say no. We like to say, let's put together a plan and make it happen. We partnered with a company called UQual, which is a credit repair company. That company will actually assign a credit liaison with you to put together a plan of attack. We tell them we need to get this buyer scores up to 680. They will put together an action plan to make it happen. They will follow up with the buyer. They will give the buyer homework to do. They'll be working on things behind the scenes. Okay. It's not a free service, but the cool thing is that if and when they get the buyer home ready to buy and they come back to us, we will give them a $500 lender paid credit at closing to help offset some of the cost of that program. So it's a nice little fringe benefit. And I've got right now actively about 25 people in the program at various stages, but these are all people that will become future home buyers that maybe their current credit lender, bank just wasn't able to take that time to put in with them. So that's a little bit of hope for everybody out there, that at any given time, anybody can get the help and guidance they need.
That's
That's it.
amazing that you have that program. I like that. Are there any other questions out there? Well, thank you for joining us. I think we had a really great time tonight. I hope you did too. Again, you can leave comments. This video will play over and over on our feeds. And we appreciate you taking the time to listen to us. And I hope you have a nice evening.
Thank you, Donna.
Yeah, thank you very
Jason.
much. Yeah, thanks,
you.
Josh. Thank you, Donna.
Yep. Bye.
Bye, guys.
Bye, guys.
So what I did was I had to log out of Facebook. Can you hear me?
I'm still here.
Okay.
So we're stopped now, right? We're not live.
Oh, I have no idea, but I logged out of Facebook, but I guess maybe I didn't.
Meeting is now streaming live on Facebook.
Still?
Yeah.
Yeah, I guess I didn't log out yet.
I'm gonna leave. Why don't you leave too, and then we can reconvene on a phone.
Okay, good idea. I'll shut down my whole computer.
Okay.
Bye.
Bye.
Oh.